It's Monday. We're back here on Monday Market 15, the 15-minute show that takes about, who knows, 30, 40, I don't know. We kind of play by every week. Rob Morales, RCO Network here, live on a Monday, bringing you the latest information about the Phoenix housing market with my esteemed co-host and special guest, but we'll get to him in a second, Miss Ashley Miller.
Hello, everyone.
Yeah, there she is. The bright and the beautiful, the pink, purple-haired Ashley. We won't talk about that today. But Miss Miller, we do have a special guest today, right?
We do.
Please, do you want to introduce him?
I would love to. So Kyle Newman has been a part of our family for longer than I'd like to admit, because that would age me. He has been in the real estate industry for
8 years.
8 years, almost a decade, and has really changed from the beginning to where he is now. Not only his thought process, but the emotional behavior behind real estate and the buying process, and has created some really awesome, what's the word I'm looking for? Formulas, synergy, energy. So welcome.
So please welcome.
And it's his first time being on a podcast.
Here he is. We try to get creative with this stuff. I don't know, whatever. Hello, Kyle. How are you doing today, sir?
Doing good. Got me out of my shell for once.
Oh, really? You don't do these podcasts or anything, do you?
No, I kind of fly by night. I've been trying to be low key for a little while, but honestly, I see the huge value in being invited, and I appreciate you having me here.
No problem. So if you're watching us live, go ahead and hit those like buttons. Ashley appreciates those purple hearts. So if you want to give some hearts, she loves that. She double loves the purple. So if you want to drop those.
Obviously, that was a mistake, you guys.
So comments or questions about the housing market, we're here to answer them. Kyle's here. Look. Featuring Kyle Newman.
I did, yeah. Well, one of the things that we had discussed before the show, we always have a discussion before the show what we're going on about.
Yep.
And I loved one of Kyle's comments was invisible lines, and then Robert had added erasing the visible lines. And to both of you being in the real estate world, granted I'm in real estate, but I'm in title, I thought it was very intriguing to find both of your opinions and how that played in. So what is your version, Kyle, of erasing the invisible lines? What does that look like to you? And not only just the Arizona market, and you can start with the Arizona market and then continue on to outside of Arizona, or you can do an overall.
Sure. I mean, well, that is where I started. I started here in Arizona. What I heard when I first became a real estate agent was that everybody usually focuses in a special area. They have their specialty market.
Zip code?
Zip code, city, whatever that is for them. And, I started with that in mind. Ultimately found out that clients may want to go somewhere else. So do buyers and sellers. There's always relocation, so maybe from one side of town to the next. So that expanded my viewpoint a little bit from there. Then fast forward a little while later, I actually got licensed in Nevada. And that was my idea of erasing lines, was just getting out of Arizona and being able to go and accommodate wherever my people wanted to go. And it seemed like these two markets were playing nicely with each other. There was a lot of back and forth.
Same facts.
Yeah, exactly. I mean, it's similar markets, just a little bit away, geographical. But at the end of the day, I really looked at the U.S. as a whole market. So I wanted to erase the lines between all the states, and being able to facilitate, again, across the country, I think really just opens up a ton of value to being able to not have to do business in a certain market. If something happens as far as Arizona is concerned, whether it's inventory, supply, demand, there is some sort of commonalities across the country, but at the same time, there are better places you can be, and being able to erase those lines, I think, is going to be crucial.
Yeah, because I think there's opportunities just about everywhere, and you have to be open up to those, and you can't really restrict those. The people that watch our show typically are people from Arizona, and so they're kind of confined here. And I do believe there's a certain segment of our people watching that do look for those opportunities elsewhere. And here you are.
Yeah,
they're not just here.
That's what I noticed is, again, at least as an investor out here, if you're looking for a rental, I think 8% is the golden number everybody looks for. They want an 8% cap rate. But
Can you explain cap rate real quick for those who are not familiar with a cap rate?
Sure. Yeah. Cap rate is essentially a net return on investment. So if you're, buying a property for $100,000, $8,000 a year would essentially be an 8% cap rate that you're netting.
Meaning, if you buy a property for $100,000, your rent or your mortgage payment, I apologize, is $1,000. Then. So
essentially, it would be, as an investor, if you bought a house for $100,000 cash, and if you could make $8,000 back annually
on
net,
top of what
So it's just a return on investment.
Right.
So yeah, it would basically be $8,000 a year back off of $100,000 would be an 8% cap.
So when you guys hear the word cap rate, that's what they're referring to. The dollar amount that is on top of when you buy a property, what your mortgage payment is, and then what you rent it out for, that is what you're getting back from that.
Correct.
Yeah.
So, and being able to hit an 8% here, again, is a great thing.
It's really great, yeah.
But we've been breaking into markets where we're seeing 20 to 30% return on investment, which is astounding. And again, another reason I think that someone may consider breaking those lines, erasing those lines, however you want to put it.
Can you, go ahead.
I was going to say, as far as the economy, do you follow the economy too? Because I think inflation has just hit every segment, every asset group, every market.
Completely. And I think that's something people don't understand is that the dollar value is affected by inflation tremendously. Your buying power essentially is going down.
Yeah.
We've seen lumber go up almost 4 times, which greatly affects the value. When you see gas prices go up, everything that you get that's a good is essentially going to be something that is now transported. So that's going to affect the value there. And 100,000, even 10 years ago, completely isn't what it is now. And we're at a very much quicker pace because I read a statistic, I didn't fact check it, but 20% of the money that has been printed in history was printed within the last year or so because a lot of these stimulus packages.
Yeah. I mean, when we do the finance show, there's a lot of information that is just out there. And when you have a very, I guess, mindful investor, they have to take every market into account and how each one affects each other.
Mm-hmm.
Especially when you're making a purchase decision, like for a house, for instance. I'll stay focused on houses because that's what we're trying to do. But leading on just opportunities. I mean, like I said, there's plenty of opportunities out there, and as an investor that's in the area, especially that across the country, but in Arizona particularly, is this a fix and flip market still?
Yeah, I mean, if you can find the deals with the equity, I think fix and flip is the way to go. I would definitely recommend towards a shorter term strategy versus, like building additions or, even building ground up construction. I think there's too much uncertainty there. But I do think that there is still very much an opportunity to fix and flip.
Are you into fix and flip right now?
I don't personally, no.
Okay.
I choose to wholesale.
Okay.
Myself.
So what about an opportunity? So I have a house. I'm like, oh, okay, I have all this equity, right?
Mm-hmm.
And somebody like a third party or an open door or an investor, somebody comes to me that wants to buy my property.
Said the no
I'm
word. She said the naughty
I know. I'm trying not to be naughty. They come to me and I'm like, oh, that's like a $65,000 gain to me. Like that could be a huge deal. What is your opinion? Because there's a stat, 83% of our equity or our retirement comes from our home equity. Mm-hmm. Do you think right now that people should, and you stated before, about selling to not?
Yeah, don't panic. I mean, if you see the market changing, especially in a downward trajectory, I think it's very smart to sit in the house, especially if you already had a 10-year plan. Don't worry about the equity that you're going to lose. If you're there for 10 years, the market is cyclical. We've seen it from 08, and we're back up to 08 levels, possibly above. If you sell when you're down, you're losing, and that's a guarantee.
But we're not going to hit 08 again. I don't see that.
It's all speculation. I mean, that's the one thing about the market is nobody has a crystal ball. I don't profess to know one way or the other. If you have a crystal ball,
I don't know. Ashley has a crystal ball for Morristown.
I
mean, she's
Morristown.
Do you have any information on Morristown?
On Morristown? We bring this up almost every single time.
Well, because you talk about it all the
I'm
time.
kind of obsessed with it.
I think I put the bug in your ear, honestly. I don't know if you remember that. But yeah, Morristown.
She's got lots of bugs in her ear.
Morristown actually, from what I heard, Troon, or the people that developed Troon, which is a very prestigious neighborhood out here, became the concessioners out there. I actually live out there myself, and I go riding sometimes.
Oh, in Morristown?
Yeah, Morristown. And I was driving down the road in my little buggy, and I noticed to the side that there is a cable running on the ground. So I kind of got out, and I was like, this is interesting. What are they doing here? Yeah. They're building a better infrastructure in Morristown than I have in North Peoria. They have better internet speeds available to them running along a dirt road than I do in Peoria, and I think that's a very interesting.
Somebody's happy over here.
I'm just glad I have somebody to back me up on what I was saying.
Oh boy!
I lost a land deal out there. I was a little upset about it. It was a really nice deal, but I just took a little too long on it. So.
Oh boy!
So now we're gonna try to change how we're talking about. So the emotional thing. So you talked about it like, I found this cord and I didn't buy it, and now that became kind of maybe emotional trigger. So how do we control our emotions from doing a panic sell? How do we change our emotions from understanding that we may not have the best credit, so we may have to find non-conformatory loans to purchase a home? Like, what is your opinion on how we all do that?
Because I think there's a lot of people out there trying to figure out ways to get funded, because banks aren't necessarily funding loans, home loans anymore. It's usually these mortgage brokers or somebody on the side.
Right. So, I mean, it's really depending on what you want to do. If you're looking to invest just outright, obviously there's something called hard money loans, which is an interest money loan, or interest only loan, I should say. Typically it's a higher percent, but there is such thing as good debt. If you can create good debt to leverage the money that you have, and just an example, let's say you have $100,000 and you're going to do a single flip for $100,000. You're doing one flip, your eggs are invested in one basket. However, with a hard money loan, typically they'll allow you to put 10% down and they'll fund up to 100% of the remodel. So with that same 100,000, if you did 10 $100,000 deals, you could literally amplify and multiply what you're doing times 10. And even if you're paying some money away in interest, just by leveraging the efficiency factor, you're going to be able to generate a lot more revenue. So, I mean, that's one component of it. But non-conforming loans are typically, instead of used for investment, they're more used for owner-occupied properties. They're based on stated income and not so much on your credit score, which is great, because if you don't have a great credit score, but you still want to be able to get into a property, a non-conforming loan, which the definition of a non-conforming loan is something that's not the typical loan a bank's going to give you, like an FHA or a VA or a conventional.
Yeah, and I think people
DPA as well, down payment assistance, that would be non-conforming, non-traditional.
And people in our group, in our student network, they're most of them are self-employed or 1099s, or they're making their own income. They're self-employed. And so that's where I tend to see people having a challenge or struggle with, as far as getting traditional funding or traditional financing. And they have to look for the alternative sources, because sometimes a lender or a bank won't even approve or even look at you if you're doing a 1099.
Yeah, I mean, I actually looked into that myself. So when I had my first year and a half in real estate, I was doing really well. And then being a little more green, come to find out that you actually have to have 2 years of taxes from the same line of work. And I sat down and spoke with the lender, and the rates weren't as bad as I would have expected. I mean, it was really based on cash flow, and stated income, what they could see and verify in and out of your bank. So it is an option even for someone that doesn't have 2 years of finances and taxes from the similar job.
Well, I wouldn't even say 2 years. Like, I just got a text message from my girlfriend earlier. She wants to buy in the historic district. And I said, hey, did you call the lender to get it pre-approved? She said, I can't, because I did my taxes and it only shows that I'm making $70,000 per year. But her bank account shows that she's showing more. So yes, she can get a home, but she's going to pay more than the two. Where are rates at today? Do you have those up?
Oh, do I have to do rates?
2 point.
I'll pull it up. Keep talking.
2.5, 2.75. You might pay maybe around 4.5, maybe a little bit more, but that still enables you to purchase a home within a certain price range, and that's the beginning of creating your financial future. Because if you sit on it long enough, you're going to create the equity, which, again, 83% of people's retirement is the equity in their property if you sit on it long enough.
Yeah, I mean, you're living in a piggy bank. I mean, if you're renting, essentially it's 100% interest.
And somebody else.
Yeah, you could rent for 100 years and you're never going to own the property. So it's literally, I equate it to 100% interest versus, even if you're on a non-conforming loan, 5 or 7% if it was a high non-conforming.
Love that.
And far as full disclosure, I'm putting up bank rates right now. This is just bankrate.com, just some average rates, and this is for a well-qualified buyer on I should do a purchase of around 400,000, 20% down, 740 credit score, which is a little high for most people. So you're looking at about 3% right now for an average person. Looks like the median price.
Do 0% down for one moment, because most people don't have 20%.
Why don't you have 20% down? Actually, I thought you had boatloads of money.
I know, I'm just full of it.
How do you mean?
Okay, so 3%.
So roughly about a little over 3%, 3.25.
Let's just call it 4. But what Kyle said, if you're renting, it's 100% interest in somebody else's property. But if you buy, doing one of the non-conforming loans, you could range anywhere from 3.25, 3.5, up to hard money could be 4 to 10.
I mean, hard money, I even see for first-time fix and flippers. Sometimes it'll be as high as 12. I think my first one, I paid 12 to 14%.
Right.
And interest only, meaning that it actually never pays down the amount you borrow.
Right.
So if you borrow 100,000, you make payments on 14%, you still owe that 100,000 back at the end of the fix and flip.
Yeah.
However, if you're profiting 30, 40,000, and if it takes you 3 or 4 months to actually complete the project, again, it's good debt in my opinion, because you're able to leverage the funds. You're able to actually pay the holding cost versus you have a $100,000 flip, you buy it for 100,000. How do you fix it if you have no money left?
But one of the key things you said is renting is 100% interest. And
Correct.
Robert can backtrack this because he works with a lot of buyers. People who are renting and they're complaining about the interest rates, or not complaining. They don't want to go into a non-conforming FHA, VA, down payment assistance because the interest rates are higher. Would you rather pay 100%, or would you rather pay 5% for a DPA?
It's a logical question. And I mean,
legit is.
Even beyond that, I think a lot of people, and one of my favorite questions is, should I buy right now? Are we at the top of the market? Should I buy right now? And it's like, well, let's analyze numbers a little bit.
Yeah, let's look at your
That's my crystal
situation.
If it's going to take 10 years for the market to cycle, and you're paying $1,000 a month, that's $120,000 that you're paying away in rent over the course of 10 years.
Yeah.
If you then buy something right now, even if the market goes down and back up, it's not going to take that off because of the amortization, which is essentially you paying more interest up front on the loan, and then it working into the principal balance. But if you're paying down 10 years of a principal balance, that's a third of the time of a 30-year fixed. I mean, that actually gets you quite a bit of equity to where even if it's the top of the market, yes, it's going to go down. Yes, it's likely going to come back up. It is cyclical. We see it time and time again. So I always say yes. I mean, I think it is still a great time to buy, especially if you don't plan to sell when it's down.
Right. You just don't have more babies or make them share a room.
Oh boy.
I know, I'm just saying, but
So hold on. Before you get to your next question, we're not here to give financial advice, by the way. We're just here to entertain. And each one of your situations is different. So if you have any comments or questions, go ahead and put those in the comment section below. If you like what you're seeing, hit that love button, that little heart emoji, purple, whatever color it is you want to designate. Ashley would be very happy with that. But we're here with Kyle Newman from smartwholesale.com. He's providing information about just different alternatives to conventional financing. So, Ashley, your question, miss.
So my next question is procuring real estate investments across the country. So now I live here, and I may or may not have a family, and my family lives back in Michigan.
Michigan.
I don't know. Sure, they live in Michigan now. My whole family's from here, so I don't really have that option. How do I make a decision, and can I make a decision? So what would be your top 5 things, whether it be your job, the equity in your property, understanding the profit margins in other cities, counties? What would that look like if I came to you and I have a home and I only have like maybe $30,000 to $40,000 equity in my property, families from Michigan, what would you suggest I do?
As far as you wanting to move there as the ultimate?
I know. I'm just coming to you going, I'm freaking out. I don't know what to do.
I mean, I would say that if you're looking to invest, then look at what you have right now, versus what you could potentially have. I think there's always going to be a risk versus reward type of scenario. So there's always going to be a risk in getting rid of what you have.
And I think that's a hard question sometimes when you give these scenarios, and there's so many different avenues, and I guess it depends on where you're at that day sometimes, where your life circumstances are. There's just so many different variables. When I talk to families too, it's really hard because I think they lean on you to make that decision for them. They're kind of teetering between one or the other. Should I sell? Should I buy? Should I buy now? Should I buy later? It's like they come to you to answer that question. And like Kyle said, it's speculative. Yeah, I don't know. I thought this market would have crashed back in March, but everything just kept getting pushed off. The eviction moratoriums, the loan forbearances, they just keep pushing off. And it's like, well, when is this ride going to end?
I know quite a few investors that actually had that same mindset, and they thought they knew what was going to happen, and they liquidated their properties a year or two ago, and think of what they've lost.
Yeah.
Oh.
But again, whatever interest it serves, there's always going to be a right person, and there's always going to be a wrong person in hindsight. So you really, I think when I sit down and actually talk to people, you have to make the best decision for yourself that day. It could change tomorrow, it could change a week from now, but you have to make what's best for you that day.
Exactly. And again, it may not be the best thing to cash in on the 40,000 in equity if you do have, no need to sell.
Because where are you going to go?
Exactly. I mean, house prices have gone up. A lot of people are paying over market value. So I'm not the one that's just going to say sell, cash in on your equity and invest. It really does depend on your individual circumstance and situation.
Would you, not being a financial advisor, and this just popped in my head.
We're not giving financial advice here at all.
No.
So you live in Arizona, you have equity in your property, your family lives back. Again, I'm just using Michigan as an example.
You really like Michigan.
I know, I'm just using this as an example. We could talk about Montana, but Michigan is a good market. And I'm like, you know what? I'm just going to pull out the equity in my property because appraisals are, they're doing well. Pull out that. I'm going to buy an investment in Michigan or a property in Michigan. I'm going to move out there and I'm going to rent my house in Arizona. Would you, not as a financial advisor or a mortgage person, because that's not your title,
Correct.
Would you sell the property or keep it and rent it and then buy another property in another city?
So honestly, I'd probably do neither. I would look at if you had $40,000 in equity that you were able to potentially refinance. I would look at that as a good option. I think interest rates are historically near the lowest they've been in quite some time. And locking into a low interest rate is astronomically amazing on what you save over the course of a 30-year fixed. I remember looking when I bought my house and what you actually spend on interest and what you think you're buying the house for number-wise is very different, what you actually pay at the end of the day. But if you did, in theory, have $40,000 in equity, Michigan is actually a place where you can go. Detroit, we're selling single-family properties and even what they call two flats, where there's an upstairs and a downstairs, and you can almost rent it as a duplex, even though it's technically a single family. And some of these properties you could buy for $40,000. Case in point, we did a deal last week. Actually, we did a deal. Say the one we did today. We sold one for $40,000, and it's locked in at $702 a month for the next year. Market rent's actually $850 on that. There's no way that you're going to find such a minimal investment in Arizona and such a high return with such a potential upside as well.
So that's an option for people in Arizona, right?
Yeah, I mean, you can buy wherever you want.
Exactly, but
really, we want them to sell with you and then buy somewhere.
Oh, whatever.
No.
Well, you go to your trusted source. So if you trust us here, obviously reach out and we'll take care of you. But as we're nearing the end of the show, we're got about 7 minutes, Miss.
Yeah.
So is there any specific questions that we would want to ask Kyle that he can provide as far as insight or anything that we've missed that you would want to share?
I would like to, because I've known Kyle for a very long time, and he really puts in not only an emotional portion into this, but very logical and philosophical. So one of the things we had chatted about was understanding your financial future and understanding. So erase invisible lines. What does that mean to you? And you made a quote earlier, and I tried to write a portion of it down, but I couldn't write as fast as you talk.
I'm sorry.
He's a fast talker.
Yeah, I'm a fast thinker. I try to keep up. But I essentially said that, lines are something that I choose not to see. And the reason is lines are linear. And there is a function of linear, if you understood, and it's getting very nerdy, but linear would be a line, like a straight line, which is different than exponential, where exponential, it would be like, 2 times 2 times 2 times 2, it keeps doubling every time. Oh. So by seeing and living by that linear line, you're never going to be able to achieve exponential growth. So I think by erasing the lines, you can actually create an exponential growth.
Yeah, and I think people hesitate out there, and I think a majority of the people that watch us too just want to purchase a house, or they want to feel safe and secure in that house, And the reason we brought you on the show today was to talk about these alternative ways to obtain that. Again, we're in an environment that's very speculative, in an environment or a future that's very uncertain sometimes. And I think at the end of the day, people just want to feel safe, and they want to go out. And I have about 4 active buyers that I'm working with right now. Mm-hmm. And the competition is just grossly it's horrible. It's just we can't seem to get an offer accepted. And a couple of the offers that were accepted, they're just overpriced or not a situation, or the home is undervalued for the price that it is.
Right. And I think that's a factor of the market is right now, everybody's looking to the market to buy their home. Yeah. When they don't understand that there is off-market properties available, and that's really what we specialize in, is those off-market properties. And for an instance like that, I've actually talked to quite a few agents who are now looking at taking this strategy. But imagine your client does get one of these hard money loans, which is essentially cash. Yeah. Again, there's a fair amount of interest, but what if they're buying the property 30% under market value? Right. They have a 14% interest rate. You can refinance in 6 months, so you essentially pay, 7% of that, 30% away, and you can actually have 100% of the money loaned to you to fix the property. Yeah. Then you take that property and you refi it through a traditional conforming loan, and you get all that money back, and sometimes even a little bit more than you spent. So you're cash flow positive with not having to overbid on a property over market value or bid on 10 properties before you can even get your foot in the door.
Yeah, and I would say you would, if this is an option or you explore that option, the one concern that I would have when you're getting into these types of situations is to make sure that you're in a safe and stable, that you're working on your credit to get it more established. Because he's talking about, getting into a loan and basically a hard money loan, and then going into a traditional financing situation. So the goal for yourself, if you're getting into that, if that's a choice for you, is to work on that, because for some reason you weren't able to get the conforming or the traditional loan. To continue to work that progress so that you can get qualified for that loan during that period.
Can I piggyback on that, though? Because
we
sometimes it's better right now in this market, people want to accept cash offers. So what if these people who do have good credit and they are financially stable, but they're tired of getting outbid? Yeah. So now they just get a hard money loan just to purchase the property, and then they can go in the 6 months and refinance it. So it's a short-term way to get into a property they really want prior to being able to refinance. So a hard money loan is not just for people with bad credit. Yeah. It could be just to
a negotiating option.
A negotiating option. Thank you. Yeah.
Yeah. I will say I'm negotiating one right now. That's a cash loan. I don't know if they're doing hard money or whatever, but it's presented to me as cash, and that's very favorable because the terms are shortened. The inspection period shortened. Cash financing, or no, it's not financing, but cash in itself, you don't necessarily have to wait for the loan process. You don't have to wait for an appraisal. You just have to have a person that's representing you that knows the value of the home and lets you know that, hey, this may or may not qualify for a loan later on.
Right.
Oh.
There's a lot of things to consider.
That's why it's called Erasing Invisible Lines.
So we're trying to help out there. As we're nearing the end of the show, we got about 2 more minutes because we're only supposed to be here 15, but for some reason it's been 30.
It's gone by quick.
Is there any takeaways, Kyle, for us, for the audience, for anything that, we've talked about a number of things, being educated, what alternatives are out there, the emotions behind it a little bit. Is there anything else that you'd want to share that we didn't catch or miss?
I think we've gone over it pretty well, to be quite honest with you. Just as a parting gift, I would very much say, don't let emotions control you, especially when you're in this market, because I see a lot of people, or hear of a lot of people, I should say, that are getting buyer's remorse now from being the person that outbids everybody else at the end of the day. And, you're going to wait a little while for that equity to grow when you do have other alternatives. And potentially being open-minded to exploring off-market deals, if you do have a reliable source that can show you what's out there.
Awesome. Ms. Miller, do you have anything else before we wrap up?
Ditto.
So I guess we'll kind of call it there. So I want to thank Kyle Newman. Oh, hold on. Let me get to that website before I cut everybody off. You do have a website, sir. So if you want to explore out-of-state deals or potentially contact Kyle, you can go to smartestwholesale.com. I'm going to go and put that here for a second here. I think let me pull that down right there. Smartestwholesale.com, and explore different. You wanted to explain the website? What they would do?
Sure. So you hit the homepage here, and there's a map function. I think right now you're zoomed into Arizona, but it does go across the entire United States.
Let's see if I can zoom out of there.
Yeah. There you go. So we have deals all across the country. You can also scroll down on the page. It tells you what's available. It's similar to an MLS where it'll tell you active, pending, and sold. And as you see, there's just absolutely ridiculously priced deals on here.
I love this one.
I think one factor of what we're looking at right now is we talked about inflation briefly.
Yeah.
And there's something to buying something very inexpensive, because if inflation continues going, it's going to drive the prices up, even if the dollar, value doesn't. It's going to change. Just like a piece of bubble gum used to be 5 cents, now it's $1. These properties are at a basis. If you bought something for a penny today, 10 years from now, regardless of what the economy does, it can never be worth less than a penny.
I'm going to buy this one in Dayton, Ohio.
These inexpensive properties, I think, are going to only maintain or increase in value just based on the inflation alone, regardless of what the market does. And there's some safety and security in that.
Yeah, if you watch our finance show on Friday, we talk about asset allocation. So this would be an asset and something to consider to be allocated.
Correct.
There you go. There you
So,
go.
so again, got Kyle Newman from smartwholesale.com. If you want to go there and check out some of the deals they have there, just peruse over. And again, so there we go. As we come to the end of the show today, I want to thank Kyle Newman and, of course, Miss Ashley Miller from Great American Title here to provide us the information. And Kyle, she brought him along today, just some more information. So if you need anything from us, oh, yeah, they're besties. If you need anything from us or you want to contact us, go ahead and drop us a comment, a line. We'll get back to you and see you next week. Adios.